test. Yeah, good. Okay, sorry about the delay. It's the 20th of December. It's a Friday, and we've got about 30 minutes to the NY Open, just under 30 minutes to the NY Open. We're going to get to the charts in a second. Before I do so, yeah, let's do that. Let's check the sound. Sound is good. Yeah, yeah. Okay. All good. Okay. Before we look at the daily chart, let's quickly, I'll just open this slide up. I did the same thing yesterday as well. So, sorry. So these are the 5 key areas I look for a trade. Okay, 5 key areas that I look for a trade. Or these are the areas where I find liquidity on a price chart, where I find liquidity, right? Now, there may be other ways to find liquidity, other areas of liquidity. That's fine, no issues with that. These are 5 key areas where I find liquidity to session trade, the New York session. I trade 2 to 2.5 hours of the New York session. That's it. I don't exceed that. So if you watch my streams, if you've been on my streams, then you'd have seen that. Um, One second. Okay. What's this message? Um, One second. Is there an issue with the audio? Output audio streaming. Yeah, I think it's all good. Yeah, I don't know what that was about. Um, yeah, I guess everyone can hear me. Yeah, I think we're good. Sorry. Yeah, not sure why I have this error message. Anyway, um, back to what I was saying. These are 5 key areas I look for a trade. These are also 5 key areas that I find liquidity for session trading. I session trade. I'm a session trader. I trade 2 to 2.5 hours of the New York Open, from the New York Open, 2 to 2.5 hours after the New York Open. And these are 5 key areas that I find liquidity or where I find a trade setup, right? The first is supply demand zones. So ideally on the H4, sometimes it's not visible on the H4, then I go down to the H1. Very rarely that it's not on the H1 and I might have to go on to the M30. That is very rare, happens like probably 1 or 2% of the time. But generally supply demand zones are 80% of the time, 85% of the time on H4 time frame. And sometimes I need to refine it, so I go down to the H1 to refine, to readjust or refine a H4 supply demand zone. Okay. Inside once I draw those supply demand zones, I identify which of those zones are high liquidity zones. So high liquidity zone is a zone that has taken out an opposing zone, an opposite zone. So if there is a H4 supply zone and if that supply zone has broken through a previous H4 demand zone to the left, then that H4 zone, H4 supply zone becomes a high liquidity zone. Okay. The next thing I do is inside that high liquidity zone, I identify a high liquidity candle. That's one particular candle in that zone. It's almost always one candle, unless the zone is like really large, unless it's like a 200 pip zone where you might have 2 liquidity candles. Again, very rare, but 95-96% of the time, it's always one single candle inside the high liquidity zone. A high liquidity candle is always one high liquidity candle. It's usually on the 30-minute or the 15-minute time frame. Sometimes, very rarely on the M5, usually on the M30 or the M15, you will find a high liquidity candle. That candle is where price will go to next to find liquidity. That is why I call it a high liquidity candle. That's where price will go to grab liquidity to go in, to go back in the same direction, right? If it doesn't find liquidity, enough liquidity and in that candle to reverse, it will go to the next high liquidity candle, right? That's how price moves. The second area I look for a trade, or the second area where I find liquidity, is BRNs, or big round numbers, or psychological round numbers. So if you're talking about gold, then it's numbers like 2550, 2600, 2650, 2700, 2750, right? Those price levels. The third area is weekly support resistant levels. Now, if you've been on my streams, you will see as soon as I open the daily chart, you'll see these levels drawn out. These levels have been drawn out for months, not weeks, for months on. Okay, some of the levels that I drew those levels at the beginning of the year, and they're still there on the chart, right? Those levels hardly ever change. Maybe they change by uh, a few pips, and when I say a few pips, 5 6, I mean they go up or down by a dollar. A dollar move is like basically 10 pips, right? So basically they might move up or down by a dollar, or a 10 pip move, or a 50 cent move, which is a 5 pip move. They might move up or down, but usually they stay the same throughout for a very long time. So once you draw them, so if you look at my zones, if you take down those numbers, take a screenshot of it, you can put them on your chart and you can back test it and see how price reacted. If you're a session trader, or if you are a swing trader, you can see how, if price reacts correctly to those levels, and use them if you need to. Number four, I have two EMAs on my chart, which you've probably seen. It's a 30 period exponential moving average and a 60 period exponential moving average. I specifically use these two values because it's session trading, right? But both these EMAs are based on the 30-minute time frame. So even if I go down time frames, if I go down to the M15 or the M5 or the M1, on my chart, you will still see them based off the M30 time frame. So if price is in a trend, let's say price is in an uptrend, if price is in an uptrend and price pulls back to either the 30 or the 60, at the touch of the 30 or the touch of the 60, I will find liquidity. You'll find liquidity there. Sometimes those touches are inside a H4, H1, SDZ. Sometimes they're outside them. That doesn't matter. If it pulls back to either the 30 or the 60, you'll find liquidity at the touch of those zones, at the touch of those moving averages, right? To continue the uptrend if price is in an uptrend, and if price is in a downtrend, then again a pullback to the 30 or the 60, and then at the touch of those zones you will see price grab liquidity to continue down, right? And the fifth one is the EMA cross, is where these two EMAs, they cross each other. That's very rare. I mean, they cross each other often, but for them to cross each other and at that very moment for price to also get there at that cross is very rare during the NY session. That's very rare. I have probably seen that a couple of times this entire year, right? It doesn't happen, right? But if it does, like at the point where the 30 and the 60 cross each other, if price also during the New York session gets there and touches that the crossover point, then there is liquidity there. But very, very rarely that happens. Again, I've seen it happen like a couple of times for the year, for this entire year, right? And today is the last trading day of the year. So these I'll keep putting this chart on, but this is where I look for trades. Okay, let's go to our chart now. So this is the daily time frame. So before we do that, we've got news today. It's not important news. It's not going to do much to price. It's not important at all. It's core PCE price index that doesn't do anything. But because we have news 30 minutes after the NY open, I'm going to wait for the news to take a trade. Okay, I'm not going to be taking a trade before that. So we've got about 45 minutes to do our analysis. That's plenty of time. Usually just takes about 20-25 minutes. Okay, so on the daily time frame, we had this huge drop a couple of days ago, right? Yeah, this was the interest rate decision. So this massive 670, 680 pip candle. And then since then, price just bounced, stopped at 2586 weekly support. These are the levels I was talking about, weekly support resistance levels, right? If I zoom out, you'll see these levels. You can take a screenshot of these and use them if you like. And these numbers that you see here are BRNs, the psychological round numbers, 2550, 2500, 2600, 2650, 2700. Okay, anyway, price stopped at 2586. We've created daily support. We've pushed up, but we've also rejected 2600. Very likely that we could maybe push back up again, right? We are pushing up, maybe push back up to fill this wick because we've created daily support right at 2586, which is also very close to daily demand level, right? So this is a daily demand level here, this 350 pip zone here, a drop, two basin candles and a rally. Price is very close to that. We haven't got there yet, but just above that is weekly support 2586, and price is trying to push up from there. Now this demand zone went up and broke this supply, this rally base drop. We broke above it. You can see this move, this candle right here broke above that high, so we broke that supply zone. So this is a high liquidity demand, daily demand zone, high liquidity daily demand zone, right? Price is close to it, not got there yet. But above it, we are reacting to 2586 weekly support, so we could push up today. Let's look at the weekly candle, how the weekly, yeah, so the weekly candle may close with a wick at the bottom, so we might continue to push up. That's possible. Let's go to our trading chart now. Okay, so before I draw the zones, I always do a recap of what we spoke about the previous day in the NY session. So, a second, yeah. So, yeah. So, just give me a second. I just want to check the sound. Something's wrong here. Just give me a second. We're good. We're good. Sorry about that. Okay, so price was coming down, making lower highs and lower lows. Okay, so price was coming down, making lower highs and lower lows. No opportunity to get in on these sells. NY session started here. No wick at the top. I thought we'll probably bounce off this level here to 600 and push up. I took a tried to take a buy here at this 15-minute candle here somewhere at the bottom here, nearly at 2600. It came down, so I just maybe took about a 20-30 pip loss there. That was nothing. And then when price did close down here, this was a strong close below. This 50-minute candle was a strong close below 2600. That's a BRN right there. Let me zoom out. This candle right here. I ended the stream, I think, at this candle, or maybe this candle or this candle. That's where I ended the stream. Then I saw price this candle pull back up to retest 2600. I took a trade right there. All right, just as price tapped that, I took a trade right there. Stop loss was above this candle because this is the candle that broke and closed below. That's a liquidity candle, right? That is one liquidity candle that um, had a lot of selling volume and closed below 2600, and then these two candles ranged, and then this candle was a liquidity grab from 2600. There is a difference. This is a liquidity grab, this is a liquidity candle, right? This candle is a liquidity candle close below 2600, a strong close, bearish close below 2600, confirming the move down. And where are we coming to? We're coming to this liquidity candle right here, the one that we had marked before the NY session started, right? This was a liquidity grab. As soon as price went on the 1 minute time frame, you can see price touch that and reject that area. I took an entry right at 2600, just under, maybe about a couple of pips under 2600, and stop loss was there. So that was like a 35, I think, yeah, about a 30, 38, 37 pip stop loss, and I rode it until this, right, until this liquidity candle here, right? So that was about a 95 pip trade with about a 36, 37, 38 pip stop loss, right? So almost one to about a 3 hour trade coming down. And then I said, if you watch the last 15 or last 15 minutes of the stream, if you watch the last 15 minutes of the stream, I said wait for M30 support to be created. Wait, if you want to take buys, wait for M30 support, not M15. Wait for M30 support, because price is falling down. We don't want to catch a falling knife. We want to see some sort of confirmation. So M30 time frame is a higher time, is a better confirmation time frame than the M15 in terms of confirmations. M30 is better than M15. So wait for the wait for M30 support to be formed. We've watched the last 15 or last 10 minutes of the stream. I kept repeating this. Wait for M30 support to be formed, and then take a M15, look for a M15 engulfing candle or whatever, however you enter, but wait for M30 support to be formed and then take the trade, because then you know where your stop loss is going to be, right? So this is M30 support. This candle closed at 1830 on my IC market server time. If you go to the M15, there was, so this was the candle close, and this was the new candle open, and price pullback. So this was a liquidity candle from that area, this M15 engulfing candle, bullish engulfing candle. So if you draw the fib the way I draw it from the candle top to the candle bottom, price did come touch 2590.77, and that was a great trade, but those were just outside my trading hours, so I didn't take that trade. But we went back to 2600 in the NY session, and then we just dropped again, right? We just ranged basically. But then in the Asian session, we basically continued higher. Okay, so let's get rid of all of that. Okay, let's get rid of this as well. Okay, now today is the last day of the week. I'm not really looking to trade today, but I'm going to do the analysis, probably be a very short session today. Do the analysis, wait for news, maybe wait for 30 minutes after news, and then I'm going to call it a day. I'm not looking to take, not really looking to take any trades today unless I do get a really nice setup from one of the 5 key areas that I look for trades. If I get a clean setup there, I'll take it. If not, I won't. This is the last trading day for the week and for the year. I'll be back on the 7th of Jan, by the grace of God, on the 7th of Jan. So yeah, so let's just do the analysis now. Let's just draw zones. Okay, so the first zone is a rally, 2 basin candles and a drop, right? Rally, 2 basin candles and a drop. That's pretty obvious. It's clean, easy to see. Then is that zone above that, which we drew yesterday. So I'm going to extend that to the right. Yeah, that's it. I'm not going to. Yeah, that's 320 pips. That should cover the NY session. I don't think price is going to go any higher than that. Let's extend this liquidity candle also to the right. If you watch yesterday's stream, you'd have seen this, how I identified this liquidity candle. Okay, so this is the closest H4 supply zone that we have. Let's put in the numbers there. This is 1201 and this is high is 640. 640. Okay. Yeah, that's better. Okay, in terms of demand, we have a rally, 2 basin candles, and a rally. Okay, so let's. This is a rally. Oh, a drop. Just trying to see what that area looks like. Yeah, we're pushing up. We're pushing up for sure. Pushing up. Okay. Yeah. So a drop, 3 basin candles. I'm going to count this as a basin candle because this is in a range, right? And then the move out, the breakout from 2600. So this is 976, 978, and 702. 978, 702. Okay. And then we have this zone here that we had identified yesterday. Price tapped it perfectly. There was a high liquidity candle there. We tapped it and we pushed up. So we have to adjust this zone now. We've come here. This low is 8702. So 86.82. Yeah. So that's at the closest H4 demand level. And this is the closest H4 supply level. Okay. And that is a 123 pip range. Yeah, this is ugly basically. Yeah, I think we're pushing up, but there's wicks are the issues. But once we get above these, there's clean space to the left. There's clean space above these wicks here. It's 100, yeah, about 125, 130 pips straight up. Not sure that's going to happen today, but we've got clean space to the left. We might just move up very slowly. We're going to have to wait for news. There is something here though. We have a rally, a doji here, trying to push up to this zone here. Yeah, 150 pips up. Okay. To the downside, that's the closest zone. Then we have whatever's left of this H4 demand zone. That's whatever is left of that is there. The next time we come there, we should break it, but weekly support might push price back up. It's done it twice already. It pushed it once, it's pushed it twice, could do it again. Okay. Weekly support areas as weekly support, weekly SR levels are very strong levels. They're equally important to supply demand zones or these psychological round numbers. Let's extend this to the right as well. And this liquidity candle right here. Okay, that's good. Covered 350 pips to the downside and about 350 pips to the upside. Okay. Okay, now next thing I do is the new zone, two zones that I drew. I'm going to check if those zones are high liquidity zones or not. So first one is this supply zone. Is it a high liquidity zone? Has it taken anything out on the left? Has it taken an opposing demand zone on the left? An opposite demand zone on the left. Has it done that? We moved down. Yes, there is demand right here. We have a rally, we have a base, and we have a rally. And price did move down and take out this. So this is a high liquidity zone. So I'm going to move this label across here. Okay, that becomes a high liquidity zone. This demand zone that I drew, the fresh one, has this taken out anything to the left? No, it hasn't, right? We don't have a don't have any demand. Let's look at the M30 time frame. Yeah, it's taken out this M30. Yeah, there is supply. There is M30 supply there. Also, there is a psychological round number there, so that is an important area. So I'm gonna mark it as a high liquidity zone. If this number wasn't there, wasn't running through this zone, I would have not marked it. But because it is, 2600 is an important level. It's a key area where I look for a trade. I'm going to mark this as a high liquidity zone. Yeah, we have taken out H1 supply. So we have a rally here. Sorry, we have a drop, a base, and a drop, right? Drop, base, drop. This is the 1 hour time frame, and this candle has moved past all of that, has broken that supply, 1 hour supply. So yes, sorry, I didn't see this, has moved it. So this definitely is a high liquidity zone, right? So this is definitely a high liquidity zone. Um, Now the one below, is it a high liquidity zone? It was yesterday, but we tapped into it. Um, come, yeah, we've come just 10, I think about 8, 9 pips into it. So the zone is still valid, and we have weekly support running through it. So that's a high liquidity zone. Okay, so covered. Let's clean this up. Okay, done. Now, next step. So we've done the supply demand zones. We've identified which of those zones are high liquidity zones and which are not. And the next step is, now if price does come up, price is closer to the downside. So if price does come back down, because we're closer to the demand zone than we are to the supply zone, if we come down again during news, is there a high liquidity candle here that price can react to? So right now the largest candle in this zone is this. So that's 135 pip candle. Let's go down to the 30-minute time frame. Now the largest candle in this zone is still this. That's a 99 pip candle, right? So I'm going to mark that out. This candle right here, that's the largest candle in this zone. 940, 962. 940, 962. Yeah, that's the candle. Look at the size of that 15-minute candle. That's the liquidity candle. Okay. Remember, there is a difference between a liquidity candle and a liquidity grab. You will keep hearing me say that, and you will see me showing a reference to that almost every day. This is a liquidity candle. This is when price comes here, grabs liquidity, that's a liquidity grab, and it grabs and it moves up. Okay, this is a liquidity candle in this H4 demand zone that we've identified. Now on the 15-minute time frame, yeah, that's good. We could probably even pop down here. That's 58 pip. Yeah, we could come down here. That's okay. This high. Nine three one 962 931 is high. 931 962. On the 5-minute, it's this candle right here. Yeah, this is the largest candle. That's a 59 58 pip candle. So what I'm going to do is I'm going to put a line there, high 96.86, and see if price gets there. 96, 86. Okay, look how prices touch that level, push straight up. Is it going to do that again? Come back, touch it, push it up again? I don't know. Let's see. But that's a liquidity candle, and that's a level, right? Look at that. So once you identify the liquidity candle, trading becomes a lot easier. You see how price, it's like a perfect support resistance level on the lower time frame. See how price has tapped that level? This is all because of this liquidity candle right here on the 5-minute time frame. Okay. Now if you come further down, if price breaks this candle, I don't think it will. That's a 91 pip candle. I don't think it will. But if it does, if price doesn't have enough liquidity here, then it's going to come further down. Just give me a second. Yeah. Okay. If price does break this candle, where is it coming to next? 2586, right? That's the next level of liquidity, 2586. That's the next key area to grab liquidity. Do we have a liquidity candle in this zone to the left? Yesterday we didn't find one. Let's go check again. The liquidity on that the liquidity in that zone is consumed. Yeah, we have this candle, which is a 39 pip candle. It's 47 pips. 39 pips. $619,207. We did tap into this, went up, then we created this candle. We tapped into that here yesterday. Yeah, so once we break this, we're coming to 2586, and once we break that, if you do break this, then we're coming straight down here. That's 130, 140 pip drop here, right? Once you break this low here, and this low is 258207. Okay, just give me a second. I'll be back. We'll continue with supply, but I think price is just going to range for the next 20-30 minutes. I'll be back soon. Okay, test. Yeah. Okay. Right, so that's a liquidity area, very close to 600. 2596.86. I'd like to see price come there. Maybe take buys to go up. That's fairly decent RR as well. If you get a trade down there, safe stop loss would be under the liquidity candle always. That's a safe stop loss. But we can have a tighter stop loss if you have a M15 liquidity grab. Then the stop loss can go under that liquidity grab, and then anticipate price to go up. Right? Okay. So if you get here, is there a liquidity candle in here to push price back down? Let's look on the 1 hour. The largest candle is this. That's a 91 pip candle. Yeah, that's the one. So let's mark that out. It was the same thing I think we had done yesterday. 647.38. 647.38. Got about 16 minutes until news. Let's go down to the 15-minute. It's this candle right here. Go down to the, yeah, it's this candle. 15-minute candle, 91 pips. 5-minute. And it's this candle right here. Right? Perfect. This is the candle. 85 pip candle. That is 59. Yeah, that's the largest candle, right? 790. Okay. So if price goes up, if I do get a buy, if I take, here's a plan. If I do get buys, if price is bullish and it comes, grabs liquidity, shows me a liquidity grab on the M15 time frame and pushes up, here's where I'm taking my trade out, right? So I get in somewhere here, that's about a 200, 150 to 175 to 200 pip push up, right, to that candle. Stop loss would be under the liquidity candle, or safe stop loss is under this, sorry, stop loss would be under the liquidity grab, the 15-minute liquidity grab, or the safe stop loss is under the liquidity candle itself, this one, right, in the zone. If you go up, if you don't come down, if you continue up, and then price decides to push down from this zone, this is where I would look to enter. But if price goes up, I'd wait for M30 resistance to form, because we are bullish at the moment. We're pushing up. If you look on the 4-hour time frame, we've created support twice. We've created a support level here, we created a support level here, and we're pushing up, right? So because price is for the time being bullish, right, kind of bullish on the 4-hour time frame, I would wait for session trading. I would wait for M30 resistance to form and then look for that liquidity grab from this area to come down. And if you come down, where am I getting out? At this liquidity candle right here, at the top of this liquidity candle, around 2600. Okay, and that's that's about 170 pip move down. That's the plan for today. And now we wait. Now that I have my plan, I know what I'm going to do. Here's what I'm going to buy from. Here's what I'm going to sell from, right? Ideally, that's where I want to sell. That's where I want to buy. So now I wait to see if price gets there, right? We've got about 10, more than 12. We've got about 12 minutes to news. So we're going to have to wait now. And if price gets above that, if it breaks this high, where are we going next? 2633. That's the next liquidity area. That's 65 pips away, right? That's 65 pips away. And same thing, exact same thing. Once we get there, what do? Wait, price is bullish. For it to get there, price needs to be very bullish. So if you get there, what do? At 2633, do I take a pending order or sell? No, I don't. I wait for M30 resistance to form because we are bullish at the moment, and then look for that M15 liquidity grab to come down. That's it, simple, right? Because this is a counter trend trade. If price is trending, if I am trading with the trend and prices, let's say its price is coming down, I don't need, for these pullbacks, I don't need price to form M30 resistance to take a trade because it's a pullback to the EMAs and price is moving down. I can take a M15 candle to come down. A grab, I don't have to wait for confirmation. I don't have to wait for M30 resistance to form and then look for an M15 liquidity grab. And when I say a liquidity grab is that candle, sorry, a liquidity grab candle usually is either a bullish, if it's a liquidity grab to go up, it's a bullish engulfing candle on the M15 time frame, or what retail traders call a pin bar. Okay, so for example, yesterday, if I show you what a liquidity grab was, yesterday's liquidity grab in the NY session on the M15 time frame. I showed this at the beginning of the session when we started, when we did the recap. I spoke about this. I said wait for M30 support to form because price is coming down. Wait because we are bearish. Price is below the EMAs. We are very bearish. Wait for M30 support to form. So this is the M30 support form. This is the M30 time frame, and price formed support. Right? You can see M30 candle closed, formed support. Now this candle closed at 1830 IC market server time. Right? Go down to the 15-minute time frame and look at 1830 or before 1830. This is the candle, this is the new candle open after the M30 candle closed. This is the previous candle is a 15-minute engulfing candle. It engulfed this, right? So all I do is I draw my fib on this candle, price comes, touches it, 2590.76 or 0.77 to the pip, and pushes up straight away. So stop loss would go under this candle, under that liquidity grab candle. That's what I just spoke about. If it happens today, that's where I would place my stop as well, right? So a stop loss under here, so that would have been about a 25 pip stop loss, right? 25 pips. And here it's about 78 pips in the NY session, right? This has all happened in the NY session, in the latter half of the NY session, right? So that's a 3 to 1 RR trade. Same thing we do today. Currently we are ranging. We are not really very bullish. We're just ranging, right? We're moving sideways. We're above 2600, but we're moving sideways. But we are not bearish. We can't say that we're bearish. We're not bearish. On the 4-hour time frame, we're not bearish, right? We're not very bullish, but we're not bearish for sure. Right? I don't see there are no H4 bearish candles here. If you go down to the H1 time frame, again, we're not bearish. We're more bullish than bearish, right? So which means price is probably heading up. Okay, so that is why, because we are already heading up, I may not need an M30 support to form to take a trade here, a buy trade. If we come down, grab liquidity at 2596.86, if I see the candle, M15 candle that I like, then stops go under that candle and I take the trade to come up here. Okay. But if you go up and I want to take a sell, then price is bullish to get there, right? Price has to be very bullish to get there. Then I need to say M30 resistance form to take a trade coming down. M30 resistance form first, then look for an M15 liquidity grab, like I showed what happened yesterday in the NY session, and take the trade coming down. Very simple. Got about 7 minutes in use. We wait. Okay. I'll be back in a bit. Just save this first. Okay. I'll be back in a bit. Hmm. Okay, so news in 30 seconds. Broken this low. Yeah, we should come further down. Should come further down. Yeah, there we go. Come down. Gonna wait for the candle to close. Just don't do anything. I think we'll probably come down and tap to 600. I would like to see price tap to 600 or tap this and then close bullish like this. Without a tap, not sure if I want to take a trade on the candle close with a pullback to go up. Let's see. It's got to wait for the candle to close. It could just continue up all the way here. That's possible. If it does, then there are no buys for me. The idea I said from the beginning is I want to take a trade as close to 600 because that's an area of liquidity. Price did come there, but I have to wait for the candle to close. I can't just buy when we have a tap because I wouldn't know where to place. I would have a very broad stop loss, right? We are moving up. I said we could be bullish, come down, but we didn't. Yeah, we got to wait for the candle to close. We're pushing up. Yeah, there's no buys, no opportunity to buy. We went straight up, almost 100 pips straight up. Yeah, no buys. Got to wait for the candle to close. If we had touched to 600, that's the area of liquidity. Or if you touch this candle here, that would be great too. But still, even if it did, I still have to wait for the candle to close because I don't know where this candle is going to close. Is it going to close up here, or is it going to come all the way down and turn bearish and close down? I don't know that. So I've got to wait for the candle to close. If the previous candle, and sometimes I do, rarely, not all the time, but if the setup is there, I do take a trade during the news candle, and that's only if the setup happens before news, so or during news. So what I mean by that is before news, if this candle came down, tapped to 600 or this area and closed, right? But if it tapped it, let's say it closed above, it tapped to 600 or it tapped this liquidity candle and closed above, then that candle has grabbed liquidity and price has broken two previous M15 lows. So this candle, that means, has broken this low because it's come down already. It's broken this low, and this candle has broken this low, right? So I have two M15 lows being broken. So then I can draw my fib on that candle and then look to take a trade with the stop loss under that candle, look to take a trade going up. But it didn't. It didn't come down. It didn't grab liquidity. So because it didn't, I knew that this candle low is going to be broken with the news candle, and that's exactly what happened. It broke the low. All right. So we could come down. We could come down. We got to wait. probably not going to get a trade today going up. Maybe price goes up, um, taps into this area where M30 creates M30 resistance and then comes down later on, just like it did yesterday when it went up in the latter half of the NY session. That's possible, but I won't be here. Uh, but that's a trading idea for whoever's trading those that time. Wait for M30 resistance to form and then look for the liquidity grab to come down from this area. Might not get buys, so I think price will just continue up. The next candle will probably, this candle will close and the next candle will break the high and just continue higher. Uh, I'm gonna head off in a bit. Yeah, I'm gonna head off in a bit. Probably wait for this candle to close. Yeah. Let's see. Let's see how this candle closes. I'll wait for this candle to close. I'll be back in a bit. It's about 8 minutes for this candle to close. Okay, we are candles about to close. Closing very bullish. We're pushing up to that zone. Let's go to the Iwana. We got about another 66 pips to go. Maybe we'll put a trade here. 994022. Pending order here. Stop loss under this candle here. Anticipating price to go to this, about 120 pips. Let's go to the 50-minute time frame. Yeah, this high is 20 on the 5-minute. Yeah, that's good. On the 15-minute, close 365, open 364, modify 364. Okay, good. Yeah, so that's where the pending orders are. I don't think we might get triggered. I think price will just continue higher. Yeah, I don't know, price is very bullish at the moment. We might just continue higher. Stop loss will be under this candle. That's 2600. Stop loss around 2600. 600. Stop loss around 2600. Just under 2600. TP under here. Two 617, 2618. Yeah. I don't think we're coming down. I think we're heading up. We're very bullish. We have a bullish engulfing candle. We didn't touch 2600, but we have a bullish engulfing candle. I don't think price is going to come down here to go up. I think we're heading straight to 2618. 2618 is the TP. Price should head to 2618, and then we might, if you have volume, we might head to 2620, and then yeah, let's see if once we come here what happens. But we are heading to 2618 and then 2620. That's another 62 pips to 2618 and about 86 pips to 620. There's no pullback. Okay, it's going to be the end of the stream. Yeah. So if price comes, if you are continuing to trade today, I won't be, but if you are continuing to trade today, then just a second. Yeah, if you're continuing to trade today and you want to look for sells, Price comes up and you want to look for sells, wait for M30 resistance, M15 liquidity grab to come down, right? If price comes and breaks this high, where is it coming next? 2633. Again, that's a area of liquidity. Wait for M30 resistance to form, M15 liquidity grab to come down. Okay, because we are bullish at the moment. Right. Price, I was anticipating price to close somewhere here, the M15 and the next one to pull back, but it didn't. We're just heading straight to 2618. All right, so all the best for the New Year's, and I'll be back on the 7th, I think, of Jan. Okay, yeah, 7th of Jan, I'll be back. Yeah, with the usual time, 7:30 a.m. EST. All right. Have a great weekend. Have a great rest of the year. Be safe. See you guys in Jan.